as of today, we're still a little undervalued. So this blue line is still below this red line. So despite this most recent move in the uranium price, where the model is still saying that the uranium price is still Hello and welcome back to Capital Cosm, you bulls. Not you specifically, but you as in uranium bulls. Because uranium had a really interesting and good week. We're going to look at the charts today, closing out the week as well as the month on all the various uranium vehicles. And we're also going to look at our machine learning models that we built last week and see where we're tracking there this week. Before we get started, though, nothing in this video is financial advice. I am not a financial advisor. Please do your own due diligence. It's your money, your responsibility. And one more housekeeping duty, guys. Please subscribe to the channel. We're about to hit that 1,000 subscriber benchmark. And once we do, this channel will get monetized, which means it'll make it a lot more sustainable for me to provide you with content and more guests that we're seeing lately, more high profile guests. So if you haven't already, hit that subscribe button. It's only a click. It doesn't cost you a single dime. So if you could do that for me, I'd really appreciate it. And if you enjoy this video, be sure to give it a like as well and comment down below. Anyways, with that said, let's go ahead and dive into the charts here. What do we got? We have the uranium spot price on the weeklies. So let's take a look at this thing. We have a clean breakout here after this, ascending pattern, this ascending squeezing pattern, this consolidation pattern. We've had 1, 2, 3, 4, 5, 6, 7 consecutive weeks since this breakout. Actually more, 8, 9. Actually. So it's been over a couple months now since we broke out of this, and we haven't looked back. And you know what else is interesting? These green bars get bigger every single week. They keep getting bigger and bigger and bigger and bigger. This week we are sitting at 55.60 on the uranium metals price. Let's also look at the monthly, see how that's coming along. Again, the greater the time interval. So a month is a greater time interval than a week. And if we see that same pattern being represented on a greater time interval, that's just more confirmation to our interpretation. So on the monthly for May, we had this big green candlestick at the close of May, a bigger green candlestick than we had in April. So, and we're continuing to break out. We're not looking back. We're not retesting anything. We're just cleanly breaking out. This looks really good, guys. The weeklies are showing it as well as the monthlies. That's what we want. We want confirmation at the greater time intervals, the monthly candlesticks. All right, let's move on over to the miners. This is URNM on the weekly as well. And as you can see here, a bullish engulfing closing out the week. We very briefly hit our head on this support line here and quickly rejected it somewhere in the middle of the week. And now we had this green bullish engulfing, which is indicative of a higher chance of an upside move. So the chances are we're going to see another move up next week. It's not a guarantee, but that's just what the chart is telling us. Now, let's look at the monthly. Let's see how URNM closed for the month. And on the monthlies, again, a pretty big green candlestick. So one thing to point out here, guys, we had 1, 2, I don't know if you'd count this as a third one, but we did have a pretty large wick here in April, but we had 2 hammer pattern candlesticks, which is a reversal signal that the buyers are overwhelming the sellers. In this case, at this support line here, we had it happen twice, 2 consecutive months in March and in April. And we also saw a pretty big wick in May. Sitting here in June, which is about a day's worth of data. So actually, no, 2 days worth of data. So in only 2 days worth of data, guys, we're already pacing above, these monthly candlesticks in only 2 days. That's insane. Let's look at URNJ. The URNJ is the junior miners, so these are more on the smaller cap side of things. So not much data with URNJ. And URNJ's initial launch date was in February 2023, so we don't really have much data to go off. So we're just going to look at the daily. We might look at the weekly as well, but let's just start things off with the daily. On the dailies, we had these two big green candlesticks, huge candlesticks. This is, you know what? This is actually the biggest green candlestick that we have on this chart. So two consecutive green candlesticks, and yet we still finished green on the day as of June 2nd. So typically you would have a consolidation, some profit taking on days like this, where you have two big, massive green candlesticks. I will say, you know, we did have a pretty large wick here at the top that was rejected. You know, it's something to keep in mind, but nonetheless, we still finished in the green. Typically you see a small red day, but this is signaling to me that we're seeing a continuation pattern leading up to the upside. So how are the miners, i.e. URNM, compared to the actual metal itself? So as you can see here, the miners have been hugging this support line for quite a while now. And as of last week, we were sitting at this level here. So this is equivalent to the same level we were at in November of 2020. So the miners were as cheap as of last week as they were in November of 2020. The cheapest that so pretty much bargain deals. Now this week, we had a bullish engulfing in the miners to uranium metal ratio. So this is a signal that the miners are about to outperform the metal. And when the miners outperform the metal, that's a strong indication that the commodity itself in the entire sector is about to move to the upside. So we see this green bullish engulfing. That's a signal that the chances are we're going to see further upside move in URNM versus the uranium metal. So we'll see how this shapes out, but things are looking quite well. Now let's look at URNJ divided by URNM. Let's see how URNJ is performing compared to URNM. So we had three consecutive large green candlesticks. The last 3 days of this week, post this Namibian news that induced this huge sell-off here, have been pretty strong. So again, the more we see, the more speculative names in the industry, in the sector, are beginning to outperform the lesser speculative names. So the juniors are outperforming the majors, and the majors are outperforming the actual commodity itself. So things are looking good. Let's see if we can get some data in here for the weeklies, see what that looks like. Now this is a little interesting. So we do have a hammer pattern here. And that means that's another signal of a reversal. So we did have a reverse hammer pattern here, but the current week outbids the prior week. So the fact that we see a hammer pattern in this week cancels out the reverse hammer pattern the previous week. So the chances are that we see further upside in URNJ against the majors. Let's also look at uranium versus gold. How is uranium tracking to gold? Not just fiat, not just the dollar. The dollar is a moving target, but how is uranium tracking against gold? And I must say, it is quite impressive. We had this resistance line formed since October of 2022, And look at this army of green candlesticks. Look at this green candlesticks. Here, we've got such a huge volume of green candlesticks. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 out of the last 11 weeks saw green candlesticks. And again, they're only increasing in volume and in size as time goes on. So You know, you compare these green candlesticks to these green candlesticks. The most recent ones are a lot bigger. And then not only that, again, we see somewhat of a hammer pattern here as well. So the buyers outnumbered, outstrengthened the sellers here. So this is another reversal. This is a sign of more upside to come. Everything is probability, no certainties, but things are looking good. The metal is outperforming gold. It's not just going up in fiat, but also in gold. And again, the miners are outperforming the metal, and then the junior miners are outperforming the majors in the mining space. Let's take a look at, what is it here? Sprott. Let's look at the Sprott Uranium Fund. Let's go all the way up the top here. What do we got closing out the week? Despite a pretty significant move to the top, we are still sitting at a minus 6.26% discount to NAV, you guys. So what does that mean exactly? Well, let's go all the way down to this chart here. The chart here so the yellow line here is the net asset value, so the actual value of the fund itself in terms of however many pounds that they hold, that's the actual value of all the pounds that they hold in yellow. The green line is the actual share price of the fund. So as you can see here, we've been well below this yellow line, meaning that you can buy this fund, the Sprott Physical Uranium Trust, at a discount to what it's actually worth. It's actually worth $13.87, but you can buy it for $13. So this move in the uranium price that I've been pointing out to you guys, it hasn't been Sprott coming into the market to buy any more uranium. This is purely organic growth on the spot market side. And as you can see here, we haven't bought anything, or Sprott hasn't bought anything since April 28th of this year. So it's been quite a while. And then one more thing I want to point to your attention before we look at some of the machine learning stuff. This is uranium sentiment over time, proxied by the search volume of uranium stocks here on Google. So we looked up what's the volume of this search appearing over time. And of course, you had this big peak here in 2007, corresponding to the last great uranium bull market. That's indexed at 100. And even though we had a pretty significant rise up in uranium last year a couple years ago, back in fall of 2021, that only produced half as much volume in search as it did in 2007. So, and again, 2007 was a fairly infantile stage of the internet's lifespan. There's a lot more, the internet's been pretty much widely adopted now than versus where it was in 2007. So that's saying something. It's not just, we're just half of what the search volume was. No, we have more people online today than we did in 2007, and yet we could only reach about half the traffic volume in searches for uranium stocks that we saw in 2007. But where are we at today? We're at 6% of that same volume today. All this hoopla and rise in the uranium price, we're seeing on Twitter and stuff, it's barely gone up. And as of May 2023, it's only about 6% of the total volume that we saw in 2007. So sentiment has been killed, has been crushed pretty much. And you can see this here. It's been pretty much crushed since September of 2021. We're back to about the same level we were in November of 2020. Okay? So uranium is back to being a contrarian play. All right, let's look at the machine learning model. So basically what I did here, and I outlined this in last week's video, but essentially I took the oil price over time, I took the DXY, the dollar strength, I took the gold price, and I used those three variables as well as the passage of time to run it through a machine learning model and predict what the fair value uranium price should be, okay? So the red line here is what the model thinks. This is taking in data stretching all the way back to 2006, and it's tracking the gold price, it's tracking the oil price, it's tracking the dollar strength, all relevant predictors of commodities like uranium. It's taking all those prices into account and spitting out what it thinks should be the fair value of uranium. And as you can see here over time, it pretty much does a fairly good job in tracking it. Now you notice here, when the actual price here in blue gets significantly ahead of the price here in red, that's a sign that the actual price, that the price of uranium is well above fair value. And what happens thereafter? It crashes all the way down. And now you see the same thing in reverse. So here in 2021, you saw the actual value of uranium significantly below what the predicted model price should be. So the model was saying uranium should be vastly more expensive than it is than it was here in 2021. And then look at what happened thereafter. You see a huge shot up in the uranium price to meet that. And of course, it overshoots. But we have pretty much corrected back up to the, as of today, we're still a little undervalued. So this blue line is still below this red line. So despite this most recent move in the uranium price, where the model is still saying that the uranium price is still slightly undervalued compared to what it should be, based off the oil price, based off where the dollar is today, based off where the gold price is today. And this model is 89%. So it's got an R-squared value of 89%. And basically what this means is that it's capturing 89% of the variability in this data. So that's actually a pretty good number. Let's dig a little bit deeper into the model here. And so this looks at the trend. This breaks down the trend. This strips out this trend with underlying the data. And as you can see here, we've had 2020, 2021, and 2022 consecutively going up. So we've had ups and downs, but the trend has been up. It's telling us that we see a clear breakout of this downtrend here. So it's telling us that 2020 was a breakout year for uranium. Now, if we look at each individual month here, we've got each individual month, and it identifies which months perform the strongest and which months perform the weakest. And as you can tell here, March 1st to July 1st, March to July, you typically see doldrums in the uranium price. The uranium price tends to have seasonal effects that impact it on the downside. So we're currently in June. We should expect to see downside pressure in the uranium price. So let me break it down for you. The uranium price has been going up. The model is saying, after crunching all this data, it's saying that we're currently in an environment with downward pressure that should be pressing down the uranium price. Essentially, the uranium price is going, there's headwinds against the uranium price. It shouldn't be going up, but it is going up despite the headwinds. So that is good news in our case. This year is an anomalous year. So there hasn't been any buying from Sprott, and we're in a seasonal time of the year where the uranium price should be going down, but it's not going down, it's going up. So what does this mean when we start getting tailwind during June and beyond? You know, this tailwind lasts all the way up until from July all the way out until February, actually. So once we get to July, we'll have a lot more sail behind our back. And again, this corresponds to what we saw in 2021. 2021, we saw the uranium price spike around this time here in September. And it continued spiking all the way out until March of 2022, which is when we had that big crash. Not big crash, but the beginning of the consolidation phase, okay? And then finally, this chart is interesting. Okay, so let me break it down for you. So remember how we said we used oil, gold, and the DXY as predictors for the uranium price? Well, this chart tells us whether the environment induced by those three predictors, whether the oil price, the gold price, and the DXY, the combination of those three predictors, whether that was a tailwind or a headwind against uranium price. So anytime it's above this zero value, that means that those three predictors were actually pushing the uranium price up. Anytime it's below zero, it's in negative territory. That means that those three predictors were pushing the uranium price down. So whatever the oil price was, whatever the gold price was, that was actually a headwind against uranium. So what do we see here? So we were at this zero level up until 2021. And that's when we started seeing the rise in the uranium price. And in 2021, we had a rising oil price. We had the DXY had yet to rise. So we had a positive a positive environment pushing us to the upside. Where are we at today? We're in pretty much neutral territory. We're still above zero. So the macro environment, when it comes to gold, oil, and DXY, is still in our favor. But nonetheless, even though the macro environment isn't as good as it was all the way out here in early 2022, we're still seeing a rise up in uranium. We're still in positive territory. The macro environment is still a tailwind for our uranium price. So that's what we got here today, guys. Drop me a comment what you guys think about this stuff. Do you guys want to see more machine learning techniques applied to commodities like uranium? What else would you like me to kind of track as well? Drop me a comment below. Let me know what you think. Do you think this is simply a dead cat bounce? It's a bull trap, as they say, or is there something more to the story here? Really interested to hear what you guys say. And with that said, I will see you in the next video. And don't forget to subscribe too. Don't forget to subscribe. Get those subscribe numbers up. Get that 1,000 subscriber number. We will be monetized. We will create more and more content. It will make it a lot more sustainable if I can get paid to do this stuff. And we'll get more guests as well. So the guests will look at the channel. They'll see, oh well, this guy's got 1,000 subscribers. They're more likely to say yes to an invitation to be a guest here. So really appreciate you guys. And with that said, until next time, I will see you in the next video. Bye-bye.